Did you know that Warren Buffett, one of the richest men on earth, owns not only shares of famous companies like Coca-Cola or Apple, but also some businesses you'd never expect? When most people think of Warren Buffett's investments, images of Wall Street, stock tickers, big tech companies, and giant banks come to mind. We imagine complex financial strategies, high-powered meetings, and deals worth billions. But the reality is even more fascinating, and a lot more surprising. Hidden inside his empire, Berkshire Hathaway, are companies so unexpected, so seemingly ordinary, that they reveal more about Buffett's unique investment philosophy than any financial textbook ever could. These aren't just numbers on a balance sheet. They're real businesses, often family-run, deeply embedded in their communities, and quietly churning out profits year after year. In fact, if you take a closer look, Buffett's portfolio is like a treasure map of American business culture, a reflection not just of profit motives but of values: simplicity, honesty, durability, and customer loyalty. His empire isn't built on speculative bets or chasing the latest trends. It's built on a deep understanding of what makes a business last through economic booms, recessions, technological shifts, and changing consumer habits. Today, we're going to take a deep dive into some of the strangest, most unexpected, and yet brilliant companies Warren Buffett owns, and uncover the reasons why he invested in them. This isn't just about curiosity or trivia. It's a window into his mind, his strategy, his principles. And by the end of this video, you might find yourself questioning everything you thought you knew about investing, and seeing opportunities in places you never looked before. Let's begin with something sweet. Literally. Dairy Queen. Yes, you heard that right. The beloved ice cream and fast food chain, famous for its blizzards and dipped cones, is 100% owned by Berkshire Hathaway. When Buffett bought Dairy Queen in 1998 for about $585 million, many analysts scratched their heads. Why would the Oracle of Omaha invest in an old-school ice cream brand at a time when Starbucks was booming, frozen yogurt was trendy, and fast casual dining was on the rise? But Buffett wasn't chasing fads or headlines. He saw something deeper. He cared about consistency, simplicity, and brand loyalty. Dairy Queen had over 5,000 stores globally, a loyal customer base spanning generations, and a timeless product. Think about it. Ice cream doesn't go out of style. People love it in 1950, they love it in 2025. And because Dairy Queen operates primarily as a franchisor, it collects royalties from franchisees without having to pour money into operating thousands of stores itself. That means steady, predictable cash flow with relatively low capital requirements. And here's a fun fact: Buffett himself loves Dairy Queen. He's been spotted eating their sundaes and blizzards at company events and community fundraisers. For him, this wasn't just an abstract investment. It was a product he enjoyed personally, a brand he believed in, and a business he understood inside and out. That combination, personal familiarity, emotional connection, and financial durability, is a hallmark of many Buffett investments. In fact, Buffett's investment in Dairy Queen wasn't just about numbers. It was about nostalgia, Americana, and timeless appeal. He understood that certain simple pleasures, like grabbing ice cream on a hot summer day or treating your kids to a blizzard after school, never go out of style. He wasn't betting on growth from innovation. He was betting on the enduring power of simple human joys. That's a very different lens from how most investors analyze fast food chains. Now let's move from ice cream to furniture. Nebraska Furniture Mart. Unless you live in the Midwest, you might never have heard of this giant furniture retailer. But in Omaha, Nebraska, Buffett's hometown, it's a local legend. Nebraska Furniture Mart is the largest home furnishing store in North America. And Buffett didn't just buy stock in it. He bought 80% of the entire company in 1983 by writing a simple handshake deal with its founder, Rose Blumkin, known affectionately as Mrs. B. Mrs. B was a Russian immigrant who came to America with no money and no formal education. She built Nebraska Furniture Mart from a small pawn shop into a retail empire through sheer determination, grit, and honesty. Buffett admired her toughness, her frugality, and her deep understanding of customers. Her motto was simple: sell cheap and tell the truth. But why buy a furniture store? Isn't retail risky? Buffett didn't see it that way. Nebraska Furniture Mart had a unique combination of scale, pricing power, and fanatical customer loyalty. It could sell high-quality products at lower prices than competitors because it ran a lean operation with massive buying power. And Buffett knew that in good times and bad, people would still need furniture. It wasn't glamorous, but it was dependable. For Buffett, owning Nebraska Furniture Mart wasn't just about profits. It was about supporting a business that embodied the values he cherished: honesty, frugality, customer focus, and community roots. He saw Mrs. B as the epitome of the American dream, an immigrant who worked tirelessly, built something from nothing, and treated customers like family. In a world where many businesses chase short-term gains, Mrs. B built long-term trust. And Buffett knew that trust was a competitive advantage money couldn't easily replicate. Beyond that, Nebraska Furniture Mart gave Buffett something even rarer: pricing leverage in an industry known for razor-thin margins. Its sheer volume of sales allowed it to negotiate directly with manufacturers, cutting out middlemen and passing savings to customers, without sacrificing quality. That's Buffett's dream scenario: a company so dominant in its niche that it bends the market in its favor. Now let's talk about one of Buffett's sweetest investments, literally and figuratively. See's Candies. Back in 1972, Buffett and his partner Charlie Munger bought See's Candies for $25 million. At the time, it was a regional chocolate company based in California. To outsiders, it looked like a modest little confectionery. But to Buffett, it was a treasure trove of what he calls economic goodwill. See's wasn't just selling chocolates. It was selling tradition, memories, and emotional connections. Every holiday season, loyal customers would line up to buy See's chocolates, not because they were the cheapest, but because they represented a family ritual, a gift that carried meaning. This gave See's rare pricing power. Buffett realized that customers were willing to pay a premium every year, even as prices rose, because they weren't just buying candy, they were buying nostalgia, love, and quality. Over the decades, See's has returned hundreds of millions of dollars in profits to Berkshire Hathaway, with very little need for reinvestment. Buffett once said that See's taught him the true value of a moat, a competitive advantage that protects a business from rivals. Unlike commodity businesses that compete on price, See's could maintain its customer base without slashing margins. For Buffett, it wasn't just an investment in chocolate, it was an investment in brand loyalty and pricing power, two ingredients he values above almost anything else. In fact, Buffett credits See's as the investment that helped him evolve from merely buying cigar but companies, cheap stocks with a last puff of value, into a buyer of great businesses at fair prices. See's taught him that paying up for quality could be vastly more rewarding than endlessly hunting for bargains. It was a pivotal shift in his philosophy, and many of his later investments, like Coca-Cola, Apple, and American Express, can trace their DNA back to lessons learned from See's. Now, let's shift from candy to private jets. NetJets. This one surprises a lot of people. Buffett, famous for his frugality and value investing, owning a private jet company? Isn't that the opposite of his image? But here's the twist. Buffett was originally a customer of NetJets before he became its owner. He liked the service so much that he decided to buy the entire company. NetJets offers fractional ownership of private jets, a model where customers buy a share of a plane and get guaranteed flight hours without the hassle or cost of full ownership. Buffett saw NetJets as more than a luxury service. He saw a subscription-like business with recurring revenue, high switching costs, and a loyal, affluent customer base. Once a busy executive or high-net-worth individual got used to the flexibility and time savings of NetJets, it was hard to go back to commercial airlines. Plus, NetJets dominated its niche. And unlike many luxury businesses that struggle in downturns, NetJets catered to clients who valued time over money: corporate leaders, entrepreneurs, and professionals whose businesses couldn't slow down just because the economy did. For Buffett, it wasn't just about planes. It was about owning a service people couldn't live without once they experienced it. And of course, we can't forget one of Buffett's largest, most iconic acquisitions: BNSF Railway. In 2010, Buffett bought Burlington Northern Santa Fe Railway for $44 billion, making it one of his biggest purchases ever. Now, railroads might seem boring, even old-fashioned, in a world obsessed with tech startups and digital innovation. But Buffett saw something timeless. Railroads are essential infrastructure. They're capital-intensive, yes, but they're also protected by high barriers to entry. You can't just build a competing railroad next to an existing one. It's too expensive, too regulated, and politically impossible in many regions. This gives railroads a kind of natural monopoly. They move critical goods, everything from coal and grain to consumer products, across the continent. And no matter how modern the economy gets, goods still need to move. Buffett called railroads the backbone of the American economy. With BNSF, he secured a business with steady cash flows, pricing power, and inflation protection. And beyond the economics, Buffett loved the predictability of railroads. No app could disrupt their necessity. No startup could replicate their scale. In a tech-driven world, Buffett found comfort in the permanence of steel rails stretching across the land. Of course, Buffett is also famous for his public stock picks. His largest holdings, Apple, Coca-Cola, American Express, Bank of America, Kraft Heinz, aren't just random names. Each tells a story about Buffett's thinking. Take Apple. Buffett avoided tech for decades. But when he finally invested in Apple, he went big. Why? Not because he cared about iPhone specs, but because he saw Apple as a consumer products company with unparalleled brand loyalty and a sticky ecosystem. Apple wasn't selling gadgets, it was selling status, simplicity, and integration. And once a customer entered the Apple ecosystem, it was very hard to leave. With Coca-Cola, Buffett invested in the late 1980s, declaring, "I'm 1/4 Coca-Cola," because he drank so much of it. But it wasn't just personal preference. Coca-Cola had global dominance, pricing power, and a product people consumed daily, worldwide, across all income levels. American Express was a bet on trust and brand strength. After a financial scandal in the 1960s, Buffett invested when others fled, believing in the company's ability to rebuild and endure. Decades later, it remains a core part of his portfolio. And Bank of America. Buffett invested heavily during the chaos of the 2008 financial crisis, negotiating deals that gave him preferred shares and warrants, turning a crisis into an opportunity. Finally, Kraft Heinz shows that not every Buffett move is perfect. The deal faced challenges from shifting consumer tastes and aggressive cost-cutting by partner 3G Capital. But Buffett still values brands with staying power, and ketchup, like chocolate and soda, has a place in almost every home. Across all these investments, whether it's ice cream, furniture, candy, railroads, jets, or iPhones, Buffett's strategy follows clear principles. Invest in businesses you understand, with durable competitive advantages, strong brands, loyal customers, and predictable cash flows. It's never about chasing hype. It's about patience, discipline, and owning quality businesses for the long haul. So next time you enjoy a Dairy Queen blizzard, fly NetJets, unwrap a See's chocolate, or watch a freight train roll by, remember, you're seeing the world through Warren Buffett's eyes. And maybe, just maybe, you'll start spotting value in places others overlook. Now that you've learned about some of the most surprising companies Warren Buffett owns, which one shocked you the most? Would you have invested in them if you were him? Tell me in the comments. And if you enjoyed this deep dive, don't forget to like, subscribe, and share this video with someone who loves learning about business and investing. Thanks for watching, and as Warren himself says, the best investment you can make is in yourself.